Hi, it's Con from McGrath West, Northwest, Northern Districts, Hills and Hawkesbury, and welcome to this month's Market Wrap. July was another month of adjustment for the Australian property market, with buyers and sellers continuing to navigate interest rates, challenging government policy and broader economic uncertainty. Across Sydney, the market continued to show mixed conditions. Buyers are certainly more cautious, they're taking longer to make decisions, comparing more properties and becoming increasingly disciplined around value. However, they haven't disappeared. Well-presented homes, positioned correctly, supported by strong campaigns, are still attracting genuine competition. When we look at the broader economic environment, the cash rate remained at 4.35% throughout July, giving the market some consistency after the movements we experienced earlier in the year. The latest inflation figures also provided some welcome news. Annual inflation eased to 3.8% in June, down from 4% in May, and lower than economists had expected. But the reality is that the market is unlikely to change dramatically over the remainder of the year. We appear to have entered into a holding pattern. Buyers are still cautious, but active. Sellers are adjusting their expectations, and interest rates are likely to remain a major consideration from both sides of the market. A lot of people are asking the same questions. Is now the right time to buy? Should I sell now or wait? Where are prices heading next? That hesitation is being reflected in auction clearance rates across Sydney, which averaged approximately 50% throughout July. That is considerably lower than the levels recorded at the same period last year and traditionally points towards softer market conditions. However, in a market like this, the method of sale becomes even more important. A well-run auction campaign continues to stand out as the strongest way to create urgency, uncover the depth of the buyer pool, and give a property the best opportunity to sell. Despite the uncertainty, there is still plenty of opportunity in today's market. For the astute owner, investor or buyer, this can be a great time to participate. Buyers have more choice, there's often greater room to negotiate, and sellers who present and position their property correctly can still achieve an outstanding result. Across our group, we achieved an auction clearance rate of 65% during July from 43 properties taken to auction. A couple of results really stood out. The first was 13 Dan Street in Blacktown, which attracted 8 registered bidders and sold for $1,010,000 by the recently joined Team Ramirez. The second one was 21 Chesterfield Road in Epping, where 7 bidders competed across 74 bids, with the property eventually selling for $2,411,000, above both our expectations and those of the vendors. Both results show that there is still genuine strength in the marketplace when the right property is matched with the right campaign. Across the month of July, our group listed 219 properties. We sold 118 for more than $150 million in total sales. We also met 3,000 buyers across our open homes, private inspections and auctions. That buyer activity is important because it shows that people are still out there. They are more selective and considered, but they are actively looking and ready to transact when they find the right home. The biggest message from July is that this is not one single market. Some properties are selling quickly and exceeding expectations, others are taking longer and requiring a change in strategy. With conditions unlikely to shift significantly in the short term, sellers cannot simply wait for the market to improve. The focus needs to be running the best possible campaign in the market we have today. Correct pricing, strong presentation, clear communication, and responding to early buyer feedback can make a significant difference to the final result. Of course, everyone's situation is different. Now, for the financial year just ended, I am proud and pleased to announce that we had a standout year, listing 2,400 properties, selling over 2,150 properties for a total value of $2.8 billion. We met over 76,000 buyers, we welcomed 626 new owners to our property management portfolio, 34 new agents, 60 new property management and support team members, as well as 5 partners. With the new financial year already in place, we know the next 12 months are going to be an interesting period in the residential real estate, not only in New South Wales, but in Australia. I look forward to continuing to share our updates across the coming months.